Come check out my strategy. I keep it simple, I keep it easy, and it makes money.
Launch control, this is Houston. We are go for launch.
In addition to the other couple of videos that I made in the past showing you different types of candlesticks, showing you support and resistance, things like that. And we're going to try to align all those things together, whether you're new or you're a novice trader, whatever you may be. Come check out my strategy. I keep it simple, I keep it easy, and it makes money. And you don't need to learn 10,000 different patterns and different indicators. And half the time I only use the main part of my chart and not all these extra indicators. These are just a bonus. Plus, most indicators are lagging and not forward looking. Price is what pays. Paying attention to is price and volume, but I need to explain to you my process that I go through before I enter a trade. So I sit down the night before, and the market closes a couple hours later. We have post-market, and we start getting the futures. What I mean by futures, I'm talking about the Dow and the S&P and the NASDAQ futures, what they're doing after the market's closed. I'm looking at that before the market opens, making sure it all lines up. So if the market is up, we're trading to the upside. If the market is down, we're either not trading or waiting for the market to bounce and go to the upside, or we're buying puts and shorting stock. We're trading in the direction of the overall market. If the overall market is up, 3 out of 4 stocks are up. If the overall market is down, 3 out of 4 stocks are down. So that's step one. Look at the futures. The next thing is we sit down and we plan out our trade. And this is APPN, and I'm going to show you exactly why I like this. If you watch my previous videos, you know that when I say the stock is under both my moving averages, we are bearish, and if it is above, it is bullish. And what we're looking for is a change in those moving averages over a long period of time, not a couple days, because you'll just get whipped back and forth. We're looking for a trend change over a long period of time, and the longer the trend change takes, the bigger the move. So you can see here we've been in a downtrend. You can see my trend line across the top of all these highs. How do we know we're in a downtrend? We're below both our moving averages. We have lower highs and lower lows. That is the definition of a bear stock. The opposite of bear stock would be a bullish stock, and that means higher highs and higher lows. And how I identify a change in direction is you see here the top of our trend line. The stock has now moved above both our moving averages, and our fast moving average has crossed over our slow moving average. So we have multiple things going in our favor. We've got volume. So now I'm looking at, okay, I'm bullish on the stock. I want to enter the stock because we've switched into a trend change. So I need to look and go, okay, this morning is the stock futures up? Okay, the futures are up. Now we may have a trade. Now we're looking at the long term. Now we need to go down into the short term. You need to take that long term trend and move it to a short term trend. It may not be a buy yet. You may have to wait a couple of days before you get a buy signal. So we're going to go down to 1 day, 5 minutes. Now what will happen to a lot of beginner traders is you'll see the stock take off. The emotion will kick in. You go, I'm scared of missing out. I've got FOMO. You end up buying here. The stock drops. You either sell it or you get lucky and held on to it and maybe broke even at best on this day. Or this sell-off scared you and you got out and lost money. And then you beat yourself up because the stock went back up later. I'm looking at pullbacks the first hour to the 9. Didn't happen. Or we're looking for pullbacks to VWAP midday. I don't have VWAP pulled up, so I'm going to go over here and find it for you. I'm going to make it hot pink just because that's how I identify it on all my charts. We don't have a pullback to VWAP. We got to break above it on this day. So you could possibly get a trade entry here, but really I'm looking for, I need to be breaking above the high of the day, which is here, and that really didn't happen. So overall, we probably wouldn't have entered this trade on this day. Even though it was up $5, you need to wait for a proper entry. So you need to line the long term up with the short term, and you just didn't get that on that day. I'll try to give you a different example of what I'm looking for. So this is a perfect example on Apple. We had a run up in the first hour. We bounced off the 9. We have confirmation candles. We broke past the high of the morning, and we just rocketed up. This would be an entry point that you would want to go after during the day after you lined up your longer term trend. So on Apple, you would have said, okay, we've got a crossover above the moving averages, so we're bullish. We had a pull back to the 9, stayed above it, heavy volume. Okay, we have a double top here. We may break above the double top. That would have been the day before. This would have been Friday. So if we break out here, I want to trade this. And then you go look at today and go, okay, when do I enter this? When do I enter this trade? I want to enter this on a low risk, high reward trade, and the best way to do that is pull back to the 9 or pull back to the VWAP midday. We didn't get pull back to the VWAP midday. That would be an entry point or a place to add to the position if you had gotten in here. This is also known as a flag pattern. You have a flag pattern, a pullback to the 9. Volume started to pick up a little bit. Your stop loss would be right here at the bottom of the flag. It never came down and hit your stop loss, and you rode it out for the rest of the day. If you got in on, let's say, the second candle, or even if you waited to the break above the high of the morning, you could have got in at 130, 129.30. And you would have ended up $1 for the day. So you were going and got a head start in tomorrow, and then you look at the futures again. Okay, the futures are up again. Apple may pop. If it pops $2 or $3, I make a couple $100, and then I get out. So it's just a step-by-step process. You have to add everything together. You have to add the long term and the short term together. Patterns on the long term, patterns on the short term, and line up your futures. So that's my tip for this video. Hope it helps. Come back to my channel, subscribe. 500 subscribers, we're giving away a free pair of AirPods.